Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Green is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Welcome, everybody, to another episode of the Private Equity Profits Podcast. I'm Cliff Locks, your host. And today our guest is Derek Dombeck. He's the co-founder and owner of Best REI Funding. He's a creative-minded real estate investor that has experience in almost every aspect of residential real estate. Derek has been a hard money lender for many years and is able to help his clients with the way they structure their deals and get them the funding they need. He enjoys teaching and mentoring people and currently runs 3 national mastermind groups, along with the networking and advanced strategies event called the Generations of Wealth Voyage. Derek, thanks for being on the show today.
Thanks for having me, Cliff. I really appreciate it.
It's a privilege. Tell us about your background and how you found yourself in the money lending world.
I'll try and make the long story short. It started in 2003, just like most people. We bought a couple fixer-upper rental properties, and that parlayed into, taking equity out of properties and just growing more and more the intention that when we first started was to just buy and hold rental properties, and my wife Tracy and I got to about 29 doors and about $4 million worth of assets when the markets crashed in 2007. Damn near lost it all. And primarily what we learned from that was we had zero control over our business. Everything we did was with banks. And whether we did something right or wrong didn't really matter. The banks were getting, shut down, and our contacts were getting walked out the door. And so it took a few years to work through that. And that's when we really started to embrace learning how to creatively structure deals, close deals without using bank funding. And about 2011, 2012, I met my current business partner, Jeff. And that's where my eyes were open to the world of lending. Jeff had never used a bank for any of his transactions. He had started in about a year or two after I did, but never went to a bank, and had raised private capital to fund his own deals, and ultimately had dabbled a little bit in private lending. But it was a few years later, as we were raising private money for our own deals, we raised more money than we could keep busy and didn't want to have our investors take their money and invest somewhere else. But we had also done something I hadn't done in the first half of my career, and we embraced building a network of other individuals, at that point mostly local. So we had friends that needed money, and we had investors that had money that we couldn't keep busy. So we facilitated the loans and got paid for the spread versus from what we pay our investors versus what we charge. And it was really our primary business then was still buying and selling properties, flipping houses, keeping rentals. But it has segued into where Best REI Funding, which is our lending company, is our primary focus now. An average month for us now is 20, 25 loans and several $1 million a month going out the door to our clients. Still 100% privately funded. We don't take on any institutional money. And I'll never say we won't ever, but our intentions are to not. We much rather work with individuals that we can build relationships with, and if there comes a time where there is a challenge or the market shifts and some of our clients fail and we have to take properties back or anything like that, we want to be able to work with our investors. In fact, we have that conversation with all of our investors up front. Our backup plan, if we had to take back properties and we couldn't liquidate them quickly, We just put them into our real estate side of our business and rent them out and manage them until a future date.
That perfectly leads me to my next question. What makes you uniquely positioned to help others with their real estate investments?
I think it's all the stuff that I went through when we lost everything. I can legitimately sit across the kitchen table from somebody that's in distress and tell them, I know how you feel. I've been through foreclosures. I've been through a bankruptcy. I've got strategies and ways that I can help them that most people can't. And same thing with our clients. Our clients may have had a good deal when they initially came to us for a loan, but things happen and divorces and other unforeseen obstacles. We very seldom take a property back, Cliff. In fact, we're at 9 properties that we've actually had to foreclose on in the last 10 years out of, hundreds and hundreds of loans. So we have a very low default rate. Not that people don't have challenges, they certainly do, but we want to work with them. And many lenders sell off their paper. We keep everything in-house so that we have that flexibility to do workouts with our clients.
That's an important characteristic, that you're patient, sympathetic, but you're also looking at the workouts so it works for both organizations, and that creates loyalty. What are your basics regarding real estate investing? What do you see as the foundation of sound investments?
Cash flow, 100% cash flow. I made that mistake. That was really one of our biggest downfalls. We had cash flowing properties. We live in Wisconsin, so it's not hard to buy cash flow in the upper Midwest. But in those early 2000s, we were buying properties in Florida, building new construction, and got caught up in the hype of appreciation. And when the markets shift, appreciation doesn't pay the bills. No. It's just a number on a spreadsheet. So it's got a cash flow.
All right. So that's a key piece of it that we hear on the Private Equity Profits podcast from our brilliant operators like yourself, who've been in the industry for 20, 30 years, that it's always about the cash flow, because we see some large money coming into the industry on the multifamily institutional type funds, and they're looking at the appreciation side. And at some point, it's going to be a squeeze, and the cash flow will not cover those, what's needed for the expenses. It's going to get interesting. What challenges do most people make regarding receiving lending?
From a borrower standpoint, it's communication. A lot of people look at us as if we were a bank, which we're not. And sometimes people think the bank is the enemy. When there is a problem, we don't want them to stop communicating. We want to help them solve the problem. Don't hide your head in the sand, because it's not going to go away. And we're constantly preaching that to our clients.
So the ability to be extremely open with your team allows them to use a resource who's heavily seasoned, has done a lot of the ability to do the workouts, and then they can ask intelligent questions and move things forward. And the individual that you may have lent to will not have a portfolio that you have assembled over your career. So that's important. That's a very important piece of information, communications, and staying open to sharing. And no one's going to scold you. Just talk.
Cliff, it could be something literally as simple as, their contractor walked out on them and isn't showing up.
Okay.
We're still in the real estate business. We still buy and sell 2 to 3 properties a month. We have all these relationships. So they call us, we can try and connect them with a contractor or whatever the need is, but they've got to communicate.
What are the mistakes most people make when seeking lending partners for real estate investments?
Using numbers that are really just dreams. Typically they're going to come to us seeking as much as they possibly can, using the highest comps they can find, and trying to get into the deals with as little out of their pocket as possible. And we're okay with people, actually, in our lending business, if we reward people for being good negotiators. If somebody can get a really great deal, we'll lend up to 70% of the after repair value. And if they can purchase it and rehab it within that 70%, they can come to the table with $0. So I don't penalize them for being good at negotiating, but those numbers have to be realistic. And what my biggest pet peeve is when they bring me a CMA from a realtor and they're pulling comps from miles away and overlooking comps that are 2 blocks away. That happens every week.
Interesting. The due diligence process.
But it's setting themselves up for failure.
Very
It
good.
really is. So we're protecting them from themselves in a lot of cases by being more conservative and showing them, listen, if you can sell it for this high number, bonus, that's great for you. We hope you can, but we're not going to lend based on hopes and dreams. We're going to lend on what we can see for hard data.
What should people look for investing in real estate?
Depending on the market they're in, for me, I like to look for growth and, anything that's expanding, whether it's a new business coming to town, new factory, new shopping centers. Most people don't even think about or realize they can go to their local city planning and zoning department, look at the 5-year plan, the 10-year plan, and try and stay ahead of growth. I believe most people are playing in a reactionary mode and listening to mainstream media and letting that be where they get their decision making from. And that's usually reactionary and not looking ahead far enough.
That brings me to my next question. What are the challenges and pitfalls associated with investing in real estate, and how do you overcome them?
Challenges and pitfalls that I see the most are optimism.
Okay.
People are optimistic to a fault. They don't go into a deal saying, I can't wait to screw this up and lose money. As lenders, we have to look at it that way. We have to look at worst case scenario, but that they typically don't. The other thing is people take on business partners probably without doing enough vetting or without having sound documents in place to talk about what happens if they end up in a disagreement. We see that a lot in not just our loans, but we're very heavily involved in all of our real estate investor associations across the state of Wisconsin.
Good.
My partner Jeff and I do a lot of speaking and teaching on a monthly basis all around the state and nationally as well. And people are just optimistic that nothing will ever go wrong. They've got a new business partner that they met at a seminar. They shook hands. They spent, an evening at dinner, and now we're going to go do a multi-million-dollar apartment complex deal. I think it's just that optimism that gets people in trouble.
It is a marriage. There's no question to it. Your partnerships.
It should be a marriage. A lot of people go into it like a one-night stand.
Ooh, that's very enlightening. Thank you for sharing that. Do good real estate investments look the same for everyone?
Absolutely not. I live in a fairly rural area. We buy and sell in a 200-mile diameter in Wisconsin, which to people that are in larger cities, that blows their mind. I can go to a small city or town of 5,000 to 10,000 people, and I can pluck deals out of there that somebody from Atlanta, Chicago, LA, they couldn't even wrap their head around. How can you go and make money in a small town? And conversely, I don't necessarily want to go into Atlanta, Chicago, LA, and try and figure out every block of every, subsector of that city, because it's too much data for me to wrap my head around. So I think it's very much what you're comfortable with. Many people are taught or told to just invest in their backyard because it's right there. And that's sound advice, especially for people that haven't been in the business for a long time. I've got no problem investing all across the country, but I want to have somebody I trust, boots on the ground in that area, somebody that I know I can call on and rely on in, not if something bad happens, but when a challenge arises. So yeah, there's a lot of different opportunities out there if you know what to look for and it fits within your comfort zone.
That's a consistent message I hear from a lot of my guests. You really need to get in there and look at your facilities, walk the building, look at the utility rooms, and understand what you're really acquiring at this point, and then the added value that you're looking to put in and the improvements you're looking to put in, and over what period of time, and how the rent roll, you can actually increase it, and the competitiveness in that space. Those are key. Here we are in 2022 in August. Are there recession-proof real estate investments?
I would say absolutely. For me, again, I'm a little bit spoiled because we're in the Midwest, so we can hedge our investments with cash flow. In many markets, they can't do that. But when we start seeing a change in the market, I start to get away from anything in that higher price point above medians. Our median price points in Wisconsin area, 150,000 to 250,000 is pretty safe. We certainly have $500,000, $750,000 homes available. Typically, those are going to start extending out on, days on market. You cannot cash flow them. The only way you can cash flow something like that is potentially as a short-term corporate rental or a vacation home. What we see in a recession, usually people spend less money on vacationing or using these types of properties. So I would stay in that, the bread and butter cookie cutter 3-bedroom, 2-bath ranch style houses that are always going to be something you can sell or rent.
Know your market.
Know your market.
That's it. What is your due diligence process like? What does the investor need to look out for?
From a lending standpoint, if we're given a loan, we're not heavily worried about the borrower's income, but we're asset-based lenders. So that makes us different than a bank. Asset-based just meaning if our borrower signs the closing papers today and tomorrow they get hit by a bus, we're not reliant on their income whatsoever. We can go and get the asset back, be made whole, get our investors' money. And that's super important to us. I want to make that clear. When I have a client that comes to us for a loan, I tell them, you are our second highest priority. Our number one priority is our investors, because these are real people with real money. It's not some hedge fund that you feel can lose $1 billion and be okay. So we're always very clear about that. But ultimately, the due diligence comes down to their scope of work on the property, their ability to get the property done in a timely manner, the after repair value of the property, and then along the way, as we're doing inspections, are they performing? Are they getting things done timely? And if not, we need to know why. And if the reasoning isn't good enough, then we may have to step in and do a workout or take the property back. But the due diligence really is pretty basic. I mean, there's a lot of it, but it's fairly basic. It's mostly asset-based and project-based.
Are you breaking the funds into tranches based on that work that needs to be done in that home?
So we hold back the money in escrow and release it in draws.
You do. Thank you.
Yeah.
I appreciate that. Do you see any trends in real estate at this point?
I think it's overpriced. And again, going through what we went through in the last downturn, and a lot of our clients, a lot of people I meet on the street or at meetings started their investing businesses post 2010, 2011. They all have this belief that it could never happen again. It'll never be like it was in 2007. And maybe it won't, but there will be some similarities. And I have, a lot of friends around the country in different sectors of the business. Some are in apartments, some are new construction. We all talk, we all get together very often and compare notes. And just in a 2 or 3 month time frame of interest rates going up, some of them are already suffering and did not plan on interest rates doing what they're doing. And honestly, if they were that tight on the numbers, that was never a good deal to begin with.
Very good.
But it's very, very common tale I'm hearing already. And it's not really been that big of a shift.
No.
I mean, these interest rates for folks like you and myself, this is still a sale.
Yes.
Right? I started when your mortgage rates, your 30-year fixed mortgage rates were between 8 and 9%.
Okay. I had a 9% loan, just so you know, my first home I acquired. Okay.
Right. But anybody younger than 30 has never seen anything higher than 5, and they think the world is coming to an end.
And there's going to be a wake-up call.
Yes.
Yeah. Tell our listeners about your upcoming event, the Generation of Wealth Conference, to be held between February 26th and March 4th of 2023.
Absolutely. The Generations of Wealth was a continuation of an event that we used to attend, and it was put on a cruise ship. So my friends that put that event on, we went to 7 of 8 annual events with them, became very good friends, and they were in their 60s and 70s and just said, enough is enough. And they voluntold us that we should take it over, which we kind of didn't want to do right away. But this also happened during COVID. during 2020. So ultimately, we were able to put it together. We changed the name to Generations of Wealth for a couple specific reasons, partially because that generation had handed it down to us, and the knowledge that we have, came from them in a very large amount. But this is structured to be a non-selling, informational, advanced strategies event for 5 days. But we only have our speakers from 9 until 1 each day.
Okay.
From 1 o'clock into the evening, it's all open networking, hanging out by the pool, doing whatever you want to do. And then we have optional town hall sessions in the evening, which are more interactive. But what I'm most proud of is we encourage people to bring their children that are 10 and older, ideally, no additional charge. These kids can sit in on anything they want to sit in on. So this past February, we had about a dozen kids in their early and teenage years that sat through every session. And all of this information is way over their head. But two things are happening. They're getting to build their own network of other kids from around the country, parents that are freaks like us, that don't conform to what they're taught in school. They're seeing that there's a different possibility for them. And they don't have to wait until they're in their 30s, 40s, 50s to build a network like we have. And it's been really powerful. I have 3 children, 15, 11, and 5, and friends from all over the country. Cliff, you may or may not believe this, but they actually physically write handwritten letters and mail them to each other.
Very cool.
On top of social media.
Yeah.
But they stay in touch, and they encourage each other, and they're a sounding board for each other. So that part of Generations of Wealth has been, it's not all about the kids. I mean, it really is for advanced real estate investors, but I love that aspect.
Right. I want to compliment you. I'm very much a proponent of the next generation. So our listeners hear from me frequently the idea of inviting your children into the boardroom, into the family office meetings, into providing, maybe it's 5 million, 10 million, depending on the size of the deal, and introducing a son or a daughter to somebody like yourself and some of our other, guests, where they'll take them under their wing and help them understand the nuances of what a pro forma is and how investment takes place, and the nuances, because a lot of young people won't listen to their parents, but they'll listen to these seasoned, terrific, investors and folks that are, in essence, RIAs, and they're registered and they're putting money to work. And I think it's important because the next generation has a fiduciary responsibility for the large assets. Some of my listeners are sitting with 10 million, some are sitting with $30 million and more. And it's not going to be an accident to be able to put those resources to work intelligently. It's going to need to be proactive. So that next gen, and I just want to compliment you to invite the children into the educational programs. I think it's an enrichment. Compliments.
I appreciate that, Cliff. We've not done this yet, but some of us have actually talked about doing a little exchange. Send my daughter to Georgia and have my friends send their daughter to Wisconsin for a month. Good. Something like that. So we'll see how that works out.
Let me know how that works out, because I made that kind of an offer. I was working with Walmart, setting up a supply chain program for them. And I did the same thing. I invited one of the vice presidents of the supply chain. I said, send me my son, I'll send you mine. And vice versa, as an exchange program, and he's out in Arkansas, of course.
Sure.
So it was interesting, that works, by the way. The exchange, the young person does grow up a little more enriching, and the knowledge that they learn I think is extremely important. Derek, is there anything I haven't touched on that you would like to add?
I think it's just something that, and this is just my own experience, so I might be wrong on this, but I came from a background of construction. I've got a PhD, a big fancy public high school diploma. That's all it is, a PhD. But anybody can do anything they put their mind to. I never, ever believed in a million years that I would be running a multi-million-dollar lending company or, hosting national masterminds and hosting this conference. But I guess get out of your own headspace and realize that you can help people. And the knowledge and the stuff that myself and my wife went through truly can help people. We're actually selfish for not going out and educating. It wouldn't be fair for us to not help people.
Right. It's a nice philosophy. How can our listeners contact you? Are there any links you'd like to share?
Well, there's one thing, and I didn't ask you, Cliff, ahead of time, so tell me if this is not okay, but I'm currently writing a book. It's not published yet. It'll be out in November, December. I'd like to be able to give that away to your listeners for free, the electronic version of it.
Okay.
And it's not titled yet. It is the lending process, start to finish. Excellent. How to be a private lender, all the underwriting, everything that we go through every day of our business for lending. If you allow me to, all your listeners have to do is send me an email to my direct email, which is Derek at Best REI Funding. Derek is DEREK, because my mom didn't think I'd be smart enough to spell the long version, maybe. I don't know. But yeah, just send me an email, say, I heard you on Cliff's podcast. I'd love to get on the list for the free book. And any other reason they want to get a hold of me. bestreifunding.com is our parent website.
Excellent.
The Generations of Wealth website is GOWvoyage.com. And I truly am passionate about deal structuring. We haven't talked about it at all, but I love doing anything outside the box. In fact, we don't believe in a box. And I just want to help. And, we like to talk with people that, we are always raising money, but it's not a pitch. If somebody just wants to talk and find out what does that look like, or how can they raise money, I'm more than happy to help them with that too.
It's very benevolent. Thank you. Our listeners feel very, very enriched to be able to listen to these opportunities where putting money to work is something they're looking to do. And it's about trust. One of the foundations is I vet the individuals that I'm interacting with here, that we're interviewing. And that makes it a little easier to start those conversations. Some of our listeners have a lot of assets they're looking to put to work and do it intelligently. And de-risking is about taking the funds and putting them over multiple folks that are out there putting money to work. This is one of the magical ways to do it, by getting on it, and having a conversation, emailing Derek. I want to thank you so much for your time, Derek. Your experience is a valuable resource for our listeners, and we appreciate you sharing your insights. I want to thank our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. This show has been produced by Market Domination, LLC.